Hello, I'm Katrina M. Craft, and you've just tuned into the Craft More Cash podcast, where finance meets innovation and strategy becomes reality. With over 2 decades navigating the twists and turns of tax strategies and business strategies, I've had the incredible opportunity to work with startups and Fortune 500 companies alike, crafting pathways for businesses to grow and thrive. I've tailored my expertise to serve the unique needs of coaches, creators, marketers, and real estate investors. I'm on a mission to equip business founders with the financial savvy they need to grow real wealth. So buckle up and let's dive into the world of financial success, innovative strategies, and the stories that make us all want to keep pushing forward. Welcome to Craft More Cash. Let's make wealth building simple, fun, and effective. Ready to transform your financial journey? Let's start crafting. Hello, visionary entrepreneurs. I'm Katrina M. Craft, your host of Craft More Cash podcast, where we transform complexity into simplicity and turn your financial goals into achievements. Today, we're gearing up for 2025. It's a new year with the top 5 tax strategies to start your new year right. We're going to dive deep into how you can save significantly on your taxes and making sure every dollar you earn works harder for you in 2025. First up, let's talk about your business structure. Are you operating as an LLC, S Corp, C Corp, or a sole proprietorship? The start of a new year is the perfect time to evaluate if your current structure is really the most tax efficient for your expected income levels in 2025. Because what happened in 2024 may mean that in 2025, you need a different type of structure. Choosing the right structure and the entity could really save you thousands of dollars in taxes by optimizing how you're taxed. It can depend on your profits. It depends on what type of dividends you would pay yourself. So switching entities may be the solution. You may be thinking switching entities sounds complicated and time consuming, but remember, changing your business structure may seem daunting and something you don't really want to think about, but the long-term tax savings and increased liability protection are invaluable. My team and I will guide you through every step, ensuring you have a seamless transition with compliance, and you want to make sure that you're maximizing the efficiency and optimization of your entity. I saved one coach over $15,000. She was making over $500,000. She was operating as a sole proprietorship. But in less than 1 week, we were able to switch her entity and she saved $15,000. I think that's worth the time. The next item that we need to think about for 2025 that's going to boost your savings is your retirement contribution. As a business owner, it is so important to invest in your future and your retirement. You're not working with a company and you don't have the benefit of them contributing a percentage. But you, as a business owner, you employ yourself. So you have the opportunity to invest in a SEP, a solo 401k, a simple plan, and all of these types of plans are beneficial because as a business owner, you can get a tax deduction for setting up some of these small business plans, as well as you get deductions for contributing as business owner to your own plan. So the IRS is giving you credits for setting up the plan, money to you, as well as allowing you a deduction for contributing to some of these plans on your employee's behalf, which you are the employee. Your family could be the employee. Yes, it all makes tax sense, and it's an investment. It's an investment in your future financial security. Investing in your retirement is a cornerstone of financial freedom. Even small increases can lead to significant tax savings and future wealth. So I want to reiterate that this retirement can significantly reduce your taxes, and it goes into your financial future and your security. You may be thinking, I can't afford to invest in anything right now and invest in my retirement. But investing in your retirement can lead to significant tax savings and future wealth. We can help you strategize an amount that supports both your current financial health and your future goals in your retirement and your cornerstone. So even if you invest $25 a week, that could grow by compounding, and you could retire with a sufficient amount of what you need that you consider financial freedom for you. The third item we need to focus on is making sure you're deducting your home office expenses in 2025. This is a missed opportunity. If you leverage your home office, there are a lot of deductions that you can take as a portion of your home if you're using it regularly and exclusively. So these items could be your mortgage interest, your insurance, utilities, repairs, home cleaning, depreciation, all your utilities that we talk about. A lot of people have not been taking this deduction because of fear. But if you're using a portion of your home regularly and exclusively for business, you can deduct expenses such as mortgage interest, real estate taxes, insurance, utilities, repairs, house cleaning, and depreciation, a lot of expenses. The benefit of the home office is not only deducting the home office, but the true benefit could come in deducting mileage when you leave your home office. So now every time you do any type of business travel, whether it be for airports, meetings, conferences, networking events, business meals, and everyday trips to post office or supply stores, those mileage items can now be tracked as business miles, and it's a deduction for you, round trip from home office back to your home office. The IRS has increased the standard mileage from 67 cents in 2024 to now it's 70 cents a mile. So the IRS is giving you 3 extra cents per mile. Make sure you have the home office so that you can take your business miles. I mentioned that people are afraid to take the home office. I get questions all the time. Will claiming a home office trigger an audit? My response is the home office deduction is a legitimate expense for millions of entrepreneurs. With precise record keeping and legitimate use, there's nothing to fear. So make sure that you understand what deductions you can take and how to properly take those deductions so you can bulletproof against the IRS scrutiny. That's where we come in. As a tax strategist, we'll help you make sure that you are maximizing those deductions, you have the proper square footage or percentage usage, and you know how to put it on your tax return so that it's a proper deduction. The next item that we want to make sure that we pay a close attention to in 2025 is charitable giving. Charitable contributions can reduce your taxable income as well. So it really depends on if you're itemizing your deductions. If you're planning significant donations, consider donating appreciated stocks or assets instead of cash. When you do this, that allows you to avoid paying capital gains taxes on those asset sales, and you can deduct the current market value. That's a high-end wealth tip that you need to know about. You're using your assets. When you gift it, you get the deduction at the fair market rate, but you don't have to pay capital gains. That's what the rich do. Also, charitable giving is beneficial beyond the tax deduction. Beyond the tax deduction, you have strategic charitable giving. It can enhance your business brand, strengthen community ties, and support causes aligned with your values, which amplify your impact both locally and globally. As women grow wealth, the world gets better because we have the financial choice to impact as we see fit with our charities. Lastly, let's not overlook depreciation, especially for new equipment or property that's purchased in your business. That's called accelerated depreciation methods. You may have heard of the Section 179 or bonus depreciation because it could provide substantial tax benefits. That means you're depreciating items faster. But with the bonus and with the Section 179, there's ways to accelerate that depreciation and you can write it off faster. So things like your fixed assets, your equipment, your cameras, your phones, your lighting, all of these things that we use as creators and coaches, you are able to deduct now faster. It's huge. So make sure you understand Section 179 depreciation. We're here to help you with those types of decisions if you don't understand or you need additional support. As a business owner, you may be worried about future tax implications of claiming depreciation now. Some depreciation you have to recapture when you sell, or you pay taxes when you sell that item. But while it's important to consider future implications, leveraging current tax laws to reduce immediate outlays can be utilized to reinvest your savings and grow your business, because we don't know what the tax code is going to be. We don't know what the tax rates are going to be or the tax brackets. So really you need to worry about what is happening now. How can you maximize the tax code and your tax deductions now? And every year we're planning, we're strategizing, we're looking at the code. That's what a tax strategist does. We don't wait till tax time. Throughout the year, we're looking at making financial decisions and tax decisions that can impact you every single year. As we wrap up, remember the goal is not just to save on taxes, but to create a robust financial strategy that really supports your business growth and your personal wealth building. So if you're ready to dive deeper and customize these strategies for your business, visit craftmoneymap.com/call to schedule a sales call. Let's make 2025 your most financially efficient and largest wealth growth year yet. Remember, I'm here to help you navigate all the complexities of tax planning and turn them into strategic advantages. Thank you for tuning in, and let's craft more cash and success together in the new year.